Raising a venture capital fund is only the beginning. Once LPs commit their capital, they expect more than just financial returns. They expect trust, transparency, and a clear line of communication. The most successful VC firms don't just view their LPs as passive investors. They treat them as long-term partners, keeping them informed, engaged, and aligned with the fund's strategy. Managing LP relationships is about more than reporting numbers. It's about building confidence, ensuring that investors remain committed to future funds, and demonstrating that the fund managers are responsible stewards of capital. This requires a mix of regular updates, structured engagement through AGMs, the annual general meetings, and strong crisis communication when challenges arise. LPs do not want surprises. One of the biggest mistakes a venture fund can make is going silent after raising capital, leaving investors in the dark about what's happening inside the portfolio. Regular updates provide reassurance, helping LPs understand how their money is being deployed, what challenges the fund is navigating, and what milestones have been achieved. Most funds provide quarterly updates with a more detailed annual report summarizing fund performance. These updates typically include major portfolio highlights, such as key investments, exits, follow-on rounds, or challenges within portfolio companies. They also cover fund performance metrics, including IRR, TVPI, and DPI, along with market insights on trends in venture capital, startup dynamics, and macroeconomic factors affecting investment strategies. Additionally, capital calls and deployment status are addressed, detailing how much capital has been deployed, what remains, and plans for the upcoming quarters. While LPs expect structured reports, the best fund managers also personalize communication. Some LPs prefer frequent touchpoints, while others want only high-level summaries. Understanding each investor's preferences and tailoring communication accordingly helps strengthen relationships. The annual general meeting is the most important event in the LP relationship calendar. It provides fund managers with an opportunity to give a comprehensive overview of the fund's progress, share deep insights into portfolio performance, and engage directly with investors. A well-run AGM goes beyond presenting financial results. It reinforces LP confidence in the fund's strategy and management team. The agenda typically includes a high-level overview of the fund's performance, deployment progress, and major developments. Additionally, AGMs often feature deep dives into portfolio companies, highlighting key investments, explaining the rationale behind them, and outlining expectations for growth or risk mitigation. Some funds invite successful founders or industry experts as guest speakers or panelists to share insights, making the AGM more valuable beyond just numbers. A key component is also the Q&A and open discussion, where LPs expect transparency and have the opportunity to ask tough questions. Many top-tier VC firms make AGMs more interactive by moving beyond traditional boardroom settings. Some incorporate startup demo days, off-site retreats, or curated networking sessions to strengthen the LP community. For emerging managers, AGMs are particularly critical as LPs use them to decide whether to commit to the next fund. A well-organized, informative AGM can make the difference between securing first-time funding and establishing long-term institutional backing. In venture capital, not everything goes as planned. Startups fail, markets turn, and unexpected challenges arise. How a VC firm communicates during these moments defines its reputation with LPs. The worst mistake is hiding bad news. Delaying difficult conversations only damages trust and makes recovery harder. When a crisis occurs, whether due to a major portfolio company failing, macroeconomic downturns, or internal fund challenges, LPs expect transparency through timely updates, ensuring they hear about challenges directly from fund managers rather than media reports or secondary sources. Clear action plans are crucial, as investors want to understand how the fund is responding, whether by supporting a struggling startup, adjusting portfolio strategy, or mitigating risk. LPs need confidence that their capital is being managed responsibly. In some cases, proactive engagement with key LPs is necessary, allowing fund managers to seek strategic advice or provide reassurances before making public statements. Institutional LPs, in particular, value being kept in the loop before major decisions are announced. During economic downturns or broader crises, VCs must adjust their messaging to reflect market realities. If venture funding slows, portfolio companies may struggle to raise follow-on rounds, and LPs may worry about the fund's ability to generate strong returns. The best fund managers provide data-driven insights on how they are navigating uncertainty, whether by reserving more capital for follow-on investments, adjusting valuation expectations, or shifting investment focus. Ultimately, LPs understand that venture capital is high risk. What they care about is how fund managers handle uncertainty, communicate openly, and make decisions that protect long-term returns. Managing LP relationships is not just about reporting performance, it's about building a foundation for future funds. Many of today's top venture firms have been raising funds for decades, with LPs who have invested across multiple cycles. To ensure that LPs remain engaged for the long haul, fund managers should go beyond group updates and maintain regular one-on-one check-ins, as direct conversations with key LPs help strengthen trust. Involving LPs in co-investment opportunities also plays a crucial role, as many institutional investors appreciate direct exposure to high-performing portfolio companies. Additionally, top firms create a community rather than just an investor base, ensuring that LPs feel part of a larger ecosystem through exclusive events, content, or strategic insights. The true measure of success in LP relationship management is not just raising one fund, it's securing the next one. Funds that prioritize transparency, engagement, and strong crisis management build lasting partnerships with investors, ensuring that capital is available not just for today's investments, but for the next generation of startups and funds to come.